Content creators, listen up. If you are earning income from YouTube, from merchandise, from sponsorship, from brand deals, IRS definitely wants their fair share. That's why in this video, I am going to break down for you the things that you absolutely need to be doing so you do not find yourself in a tax slinky thinking IRS does not know about your income. Before we jump in, I want you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now let's get after it. Track all of your income streams. That means if you're getting income from YouTube, if you're getting sponsorship deals, if you have people paying you to advertise their merchandise, if you are selling merchandise, make sure you are reporting all of your income, regardless of whether you are receiving a 1099 NEC. Some of you may receive a 1099 NEC if you were paid $600 or more from that particular organization or individual, but regardless, make certain you're tracking all of your income streams because IRS definitely has their eye on you. One thing that you can do as a tip is use QuickBooks to account for all of your income. I always tell my clients, get all of your income tracking and linked to QuickBooks so that it can track all of it for you, and make sure you have a separate account for your brand deals and your content creation income, because you may be doing something else as well, but when you have a separate account for that, you can account for that separately along with all the expenses that go with it. Do not skip quarterly payment. So many of you do not pay your estimated taxes. We are a pay-as-you-go system, which means that when you were an employee, your employer used to withhold out of your paycheck your federal income tax, your Social Security Medicare tax, and applicable state income tax. Now that you are self-employed as a content creator, you are responsible for paying that same amount as estimated taxes, which are due 4 times a year: April 15th, June 15th, September 15th, and January 15th of the subsequent year. You may be asking yourself, well, how am I supposed to know how much to pay? Oh, this is where your content creators got to get creative and hire a professional to tell you, because lack of knowledge does not mitigate penalties for failure to pay your estimated taxes. So make certain you do so that you can get off of IRS's radar. Make sure you take advantage of deductions for creators. If you are a content creator, make sure you deduct things like your camera, make sure you deduct things like your GoPro, your different sticks to hold your cell phone, make sure you deduct your cell phone, and all of the various apparatuses that you have that help you to be a great content creator. Remember that when you are in the pursuit of income and you are making income, the things that you have to pay for in order for you to generate that income can also be tax deductible. In some instances, those items may also be used on a personal note, but if they're being used personally and that personal usage is what we call de minimis, not that much, you can still deduct it on your business tax return. As a pro tip, I want to make sure you keep all of your receipts associated with your expenses. Many of you may think, oh, I have my credit card statements, I have my Amex management report. That is not enough. You also have to have the physical receipt scanned in or the actual receipt itself, but make sure you're keeping your receipts. If you are taking people out to lunch or you are traveling, make sure you jot down on the back of the receipt the who, what, when, where, and why. Why did you travel there? Who you were with, how that was helping your business. Because these are the things you're gonna need to prove and have in the event that you're audited by Internal Revenue Service. When you are selling merchandise, you may have to pay sales tax. Sales tax is different from income tax. You have to collect sales tax based on the nexus of where you are selling. And when I say nexus, that's the location. So for example, if you are selling to people in California and you have a location there, a warehouse there, employees there, chances are you owe the state of California sales tax. Just because you're located in a different state doesn't mean you're not going to remit sales tax to other states. That's why it's so important that when you are doing business, that you get with a professional that understands all the taxes associated with doing business. It's not just income tax. It could be payroll tax. It could be fuel tax. It could be sales tax. It could be gross tax. It could be VAT tax. It goes on and on and on. And ignorance does not alleviate penalties. So make sure you understand all of your tax obligations as a content creator. Work with a tax advisor to avoid trouble. Once you get into a tax slinky, it is absolutely difficult to get out of it. That is why it's so important in the beginning that you work with a professional that is familiar with your industry and a professional that can tell you things you may or may not be aware of. Tax laws are changing every day, and there are new taxes being assessed against taxpayers every single day. Making sure that you are affiliated with a professional that is keeping an eye on what it is that you're doing so that you don't get into tax trouble is very important. Content creation, my friends, it's more than just a passion. It is a business. Even though it may not feel like it, it absolutely is. And you will be taxed as such. That is why it's so important to operate that business as a business. It's so important to work with a professional that knows what they're doing. Most of my creative types are really good at what it is that they know how to do, and that is create. But when it comes to your books and records and your income taxes, we don't want to create. We want to follow the law. Therefore, you need somebody that knows the law. That's why it's so important to start off with somebody that can help you so that you don't get yourself in a tax slinky. I can tell you numerous stories of people that have come to me after the fact that we are getting their taxes straightened out because they were either ill-advised or chose not to be advised. As much as your friends know, you have to ask yourself, are they the tax professionals? And if they're not, I highly recommend you get with one that is an actual professional and certified in what it is that they do. And now that you know better, I want you to do better. I want you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now go get after it.